Yeah, sure. So we've got a big position in a company called Kangaroo Island Plantation. So it's a timber plantation company operating on Kangaroo Island, and so they've basically accumulated bankrupt managed investment schemes over the last few years, and they've got almost all of the plantation timber on Kangaroo Island. They're in the process of getting a wharf approved for Smith Bay at Kangaroo Island, and there's a stock there that's trading in the market cap range of around about 83 million at the moment, or 80 to 85 million, let's say. And this is a company that, assuming that wharf gets approved, and there is a hurdle in that, but we're very confident that will happen. Assuming that wharf gets approved, this company will turn out a free cash flow averaging between 15 and 20 million dollars per annum, basically into perpetuity. You're buying that for $83 million, a $15 to $20 million a year cash flow for $83 million. I like that. The downside is if the port doesn't get approved, obviously the timber needs to find a way off the island, and barging the timber off the island would eat about 30% of the cash flow. It's a much less cost-effective way to get the timber to market. So, and you would go from probably being a first quartile, a lowest quartile cost producer, to being probably a third quartile cost producer. And so if the timber market became, if the prices became a bit less favourable, you would have to probably dip in and out of the market. So really, if that happens, that sort of the downside is, well, you strip 30% out of the cash flow, you still got a reasonably good investment, but not a wonderful investment.